Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family, and please note I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. And if you're going through a life pullback at the moment, please know that there are no steps backwards without 2 steps forward. The sun will come out again, and our global family's love and healing thoughts are with you. You're not alone. You're part of a global family here. Let's run the numbers. Bitcoin is currently down 4.28% to 15,804. Ethereum is down 6.01% to 1105. A lot of people are questioning, why did the crypto market come down? Of course, the FTX contagion is really serious at the moment. We also had hackers dumping ETH and GPTC contagion, rumors about Genesis. But the concept is, I think that the real reason that the markets came down, the crypto market came down, is because the DXY rallied. In yesterday's episode, I said keep your eye on the DXY and have a look at what the S&P 500 futures are doing. So let's check that out. We saw the S&P 500 futures try to get above a Stanfield level at 39.96 without success. And then what happened? The S&P 500 futures was trying to hold on to a smart money buy level, and then it turned into a smart money sell level at 39.62. The S&P 500 futures are currently 39.58. It's really important to understand the in-market dynamics and how other markets impact crypto. One thing to note, with the S&P 500 futures, we actually have a lot of support down at the 38.81 and 38.63 band, so just please keep that in mind. That's a reduction of 2% to get to that level from where the current price is basically fluctuating around now. The smart money sell level, we have one immediately above, but the key one is 39.96, and that's about 1% away. If we can get above that 1% away mythical level of 39.96, the S&P 500 could do really well. And the next level is at 40.92. And we're in crypto, so why are we bothering with the stock market? Because it really matters. Inside the masterclass, this is rule 225. Bitcoin cannot escape the stock market's gravity, and it literally cannot. One thing to bear in mind is the ACWI is actually registering positive influence in terms of upward price momentum across global markets. And we've also seen how the 2-year and the 5-year yields and the other yields have been coming up recently, as has forward expectations on the federal funds rate. This will always throw negative momentum across the stock market and across crypto. We saw in the last trading session the VIX coming down, but also the major indices coming down as well. We could see bond prices retracing, yields going up. The gold was badly hit because the dollar was rallying, and we saw also oil hit a technical bounce level. We're seeing that risk sentiment is coming out of the market, but the key is the DXY. It's literally the upward progression of the DXY that's causing mass problems across markets, including crypto. When we looked at the DXY yesterday, it was just under this smart money sell level or resistance level at 106.998. You can see actually what it's done. It broke through that level and progressed up towards this smart money sell level at 108.021. The DXY is currently 107.851. The key from this particular point is that there is a massive resistance around the 109.157 mark and a lower support at 106.998. It is quite likely that the DXY will continue to push up, but there's a lot of resistance up here. Don't be surprised if we get a bounce down in the DXY. And what would that actually do to markets? It will rally them, especially the crypto market. A lot of people do not know how markets intercorrelate and interconnect with each other. That's why inside the CTKS Masterclass, the first thing we do is to draw up our charts with the CTKS method. That's what you've been looking at inside those charts. The next thing we do is understand market structure as it applies to not only the crypto space, but the stock markets and Forex. It all gels together. If you're just looking at one thing, for example, if you're looking at the stock market and not looking at the crypto market, you're missing out. If you're looking at the stock market and not looking at Forex, again, you're missing out. You need to look at all three together. And why is that? So many commentators all around the world are saying crypto is a dying industry. Of course it's not a dying industry. The concept is crypto is Web 3.0. It's the ownership layer of internet protocols and the internet of money. Many people don't understand this fundamental distinction between crypto, Web 3.0 and Web 2.0. It's a structural change in the economic system, and it's not going away. In fact, it's being embraced. Anytime you hear a government talk about a CBDC, a central bank digital currency, and we're not going to get into the pluses and minuses of that at the moment. The concept is they're talking about blockchain, and blockchain technology is what crypto was founded on. A lot of people worry about an imminent crash in the stock market. If we look at the S&P 500, the key level to watch is actually 35.77. If we start to fall below 35.77, we could get a lot of negative turbulence. Absolutely. But what are we actually doing? We're all the way up here. We've done so incredibly well inside the stock market. If it wasn't for FTX, the crypto market would be rallying. Thank you, Sam, and thank you, Caroline. Sam Bankman-Fried, SBF, was very, very active inside the crypto market. And Alameda Research and FTX Ventures, they have a lot of cryptos in their portfolio. I thought it could be a good idea to put a couple of those cryptos up for you so that you can understand FTX Alameda Research's portfolio and see how they're actually being impacted. We can see Serum actually came down really substantially, nearly 80% reduction, and then it spiked. What you're actually going to see time and time again, we see this in the crypto market. For example, when Voyager was going down, when Luna was going down, things can go absolutely crazy. People can just pile into these things because they think they're so suppressed on price. And the shorts are overweighted in these areas, so they come in and mop up the shorts and cause these spikes. But these spikes can be very shortly lived, so be very careful about what you're doing. And it's also important to understand that not every single one of these cryptos is only an FTX Alameda Research crypto. Some of the funding comes from other sources. So it doesn't mean that these particular cryptos will go to zero. It just means you need to be cautious. What you actually want to keep your eye on is the percentage change. If the percent change is highly negative, that shows a lot of contagion effect. I'll give you an example. The greatest contagion effect is FTX's native token, FTT, down around 93.13%. That is contagion. You can see a lot of the other tokens are a lot less than 93% down. So what do we need to compare these percentages to? The best way to compare that percentage is look at the top 8 cryptos, and we can see Ethereum down over the same period of time as FTT, down about 14%, BNB around 16% down, XRP about 8%, Doge nearly 15%, ADA just a little over 14%, Matic a little over 17%, DOT nearly up towards 16%, and Tron nearly 17% down. And when you see cryptos that have been touched with the SPF finger, you can see that those percentages are really shocking in comparison to the top 8. Seeking to understand where the total crypto market could go is a very important thing to do. We have two key levels, one down about 9.68% to the $673.495 billion mark, and total crypto market cap is currently $744.74 billion, and the other one is up to the $866.05 billion level. Remembering that all markets are interconnected and intercorrelated, and the DXY is throwing a lot of pressure on crypto and the stock market at the moment. If the DXY continues to rise up to its resistance, we would expect the entire crypto market to fall to around 707 or potentially even lower to this 673. This effectively means that your portfolio could reduce by 5% or even up to 10%. But just keep in mind that there's a lot of resistance up above in terms of the DXY. I'd like to play forward a couple of scenarios, and this is all about smart money thinking. If in fact the market did retrace about 9% and then managed to come up to this level, this smart money resistance level at 799 billion, what actually that means a retracement by about 9.68%, an increase of 18.66%. This is what smart money knows, and it's what a lot of retail investors and traders do not know. If you buy something at 10 and it falls to 5, that's a 50% reduction. But if it goes from 5 back up to 10, that's 2 lots of 5. That's a 100% increase. Smart money is always looking to get onto the right side of the percentage. Just because things go down, that's not a problem, because we're looking for the advantage or the benefit for it going up. And fortunes are made in these kind of conditions. When most people are running away from the market, that's when you want to be running towards the market. But please know what you're doing. And this is the entire focus of the CryptoTradingKS Masterclass, to equip you not with just the knowledge, not with just how to mark up charts, but also how to get fear under control, because fear is the thing that we battle first and foremost as traders and investors. When you've actually mastered emotional control, which is rule 734, what you'll actually find is the red days become very enticing. You're just looking around and seeing the potential of what you can actually do with returns because you're on the right side of the percentage. But it's not just merely rule 621, buy on red, sell on green. Doesn't mean some kind of reflex action. You must know what you're doing. We know that your beloved alts cannot escape Bitcoin's gravity, and Bitcoin is currently trading at 15,782. There's a smart money level of sell resistance at 16,649, and it's literally on a smart money buy level. Surprise, surprise, that's why it actually stopped down here. It wasn't going to zero. The concept is these smart money buy levels actually stop price from falling down. But when there's too much of a gap between them, you can see some really harsh action, especially if it gathers momentum. We saw that the entire crypto market cap, the distance was about under 10%. And we can see towards strong support inside Bitcoin's price structure. And this is not made from recent price action. It's made from all of price action using the CTKS method. Very strong support exists at 13,895 all the way down to 13,602. Just keep this in mind. And this is a key thing. Without this, you're basically just blind. You don't know what the structure of the market is. When you have structure inside the market, you can make informed decisions and you can replace fear. In fact, you can fire fear as the CEO of your decision-making process and just install courage, because these lines are obeyed by institutional investors. If we lose this smart money support line at 15,758, and you can see we're just a little bit above it at the present time, the next smart money buy level is about 7.71% down at 14,582, and a series of stronger ones, quite strong, are existing at 13,895, which is about 12.3% down. We have a smart money sell level or resistance level about 5.28% above Bitcoin's price at 16,649, and a more major one up at around 18,687. The concept is always have your three-dimensional thinking. First of all, assess what would be the impact on your portfolio and your thinking if the trade went against you and went down. How would you cope with that? Would you go all in and more at one particular level, or would you actually fraction out your buy levels? Understanding how you actually trade is really, really important. As professionals, we're always seeking to get on the right side of the percentage. For example, if Bitcoin's price came down 7.71%, but then just retraced to where we are at approximately now, it would come up 8.13%. This is the power of percentages, and Zone 3 is built on percentage understanding. What about if it came down, for example, 7.71%, and then it rallied back to this 16,649 level? That's a 7.71% decrease, but a 14.15% increase. But what if it went down, all the way down, about 12.3% to this 13,895 mark, and then just retraced back to the smart money level at around 15,758? That would be about a 13.4% increase. Buying on the red really, really pays very, very handsome dividends. And Masterclass students, please look at LV25, Midterm Election Volatility Secrets You Need to Know. That's a very, very important living video that I've attached to the Masterclass. And the entire LV section is about updating you towards key things that you must know. In that particular LV video, I predict when the bottom could actually strike. The one thing that you should bear in mind, as we've taken out this previous low, a lot of people would put their covering of their stop losses down here. The institutions will be hunting those levels, and cascading longs can create sell-off waterfall impacts. And we know that the DXY is potentially on its upward path to resistance. Based on past midterm elections, we could see the bottom in between Saturday the 17th of December and the Wednesday the 18th of January. So it could be about 24 days away based on past midterm election cycles. But just bear in mind that we've had an uncharacteristically steep sell-off, and we didn't see those in past midterm elections. What typically happens around this time in a bear market is we get a flushing out of all the bad actors from the crypto space. Unfortunately, they've been there and they'll come again, just like in the stock market. Stock market has bad actors as well. And there are bad actors in the gold market, and there are bad actors in the Forex market. They're everywhere, because they're focused on money. They're greedy people. And unfortunately, when people get greedy, they don't care how they get your money. FTX's collapse was absolutely spectacular. And we've also got potential miner liquidations coming up. The miners are under a lot of cost pressure as well. And when we see about Grayscale and Genesis, as well as Ethereum hacks and all sorts of things all happening over the place, the cascading contagion from FTX could be a little bit more widespread than people think. So something like this is quite potential, but I want you to understand what it actually means. And in the masterclass, I go into a deep, deep dive on this. What actually happens after the sell-off is some of the most incredible returns you'll ever see. They actually rival anything that you would see in a bull market. But you have to know how to prepare yourself for them and how to get in and get out. If you get on the right side of the percentage, you will do incredibly well, especially in times like this. For example, if you're prepared and not scared, and we know that's a rule from the masterclass, and you prepare yourself to take advantage of lower prices, and you manage to take out around the bottom, you don't have to get the bottom, but around the bottom, and you just hold on until it retraces to this current price. And it could take a little while, or it may take not much time at all, because when you look at that particular masterclass video, you'll understand what I'm talking about. But the concept is from around, let me just pop this on, from around 10,266 up to around the current price level is nearly a 52% increase. So long as you're getting on the right side of the percentage, you're going to do incredibly well. And I believe we're going to see a lot of market turbulence. It's time to learn trading. Many people know investing, and we all know that investors become traders anytime they buy or sell. But investors are not so good at picking their exit points. They tend to hold on for dear life. And in a market like this, you would probably like to know how to trade, because all professionals know how to trade. All professional investors know how to trade, and that's how you spot them. A professional investor always times their entries. Let's have a look at the longs and the shorts. And masterclass students, you get this in TG34, my live chart here. We can see the longs are coming out of the market. The shorts are gaining confidence coming into the market. We can see with this sell-off pattern, the longs have been absolutely crushed recently. And in the past 24 hours, there's been 168.49 million in total liquidations across 58,595 positions. And when we look at total liquidations across the past 24 hours, about 80% has been long. Across the past 12 hours, about, say, 76% long. Past 4 hours, about 84% long. And the past hour, about 93% long. So the poor old longs have been whacked, literally. Now this actually exposes the shorts. The more the longs get liquidated, as we've seen in the past, the more pressure is pushed onto the other side to get liquidated. Everything exists in a state of balance and also a state of flux inside financial markets. So just bear this in mind. We could get a very, very quick short covering, especially if the DXY hits its resistance level and Bitcoin hits its support level. There's a lot to be very, very aware of inside the market. What that would actually do is to create double-digit green days. So just please be aware of this. The greatest gainers in the past 24 hours, HT, ETHW, APE, and stablecoins, plus Kava. What's Kava doing down there? Should be up above USDT. The greatest losers over the past 24 hours, Chiliz, Near, Helium, HNT, Lunacy, Algo, Solana, and XCN. Always remember, if you can get on the right side of the percentage, you're going to do really, really well. There are 4 stages that all investors and traders progress through to become consistently profitable and have a really meaningful and happy life. Zone 1 and Zone 2 are controlled by fear. Zone 3 and Zone 4 are controlled by courage. Zone 1 and Zone 2 are all about wanting certainty. There is no certainty inside financial markets, only probability. That's why you need courage. And it's important to ditch fear, because fear will have you buying and selling at the wrong times. As a community, we also subscribe to Positive Excellence, and this is all about actually having inner peace and outer peace. Money is a byproduct of doing the right things. If you have inner peace and outer peace, you'll actually experience happiness. That's the only way to get happiness. If people are always in conflict, they are always unhappy, because conflict does not create happiness. Inner and outer peace does. But when it comes to trading and investing, not having inner and outer peace causes massive losses. And we were talking about how do we control fear, the fear of buying, the fear of holding, and the fear of selling. And we can also pop in the fear of selection. That's also a good one. And Ivan said, fear is a natural emotion, as natural as hunger or thirst. And these emotions can be controlled consciously. And controlling them makes you a superhero with the superpower of being able to control your emotional state. Excellent, Ivan. And well done to everybody who popped in their BORSOG codes yesterday. Institutions are always trying to desynchronize you. When you pop in your BORSOG code, it doesn't matter if you're right or wrong. The concept is you'll get just a little bit better each and every day. And one day you'll be able to read the institution's footprints. It's just like being a tracker. You will see the twigs broken and you'll know exactly what kind of animal has passed. And some more really good comments on how to fight fear. Bad Habit said, I'm fighting fear by expecting the best and planning for the worst. As for trading, I fight fear by starting small, expecting volatility, and taking what the market will give me. Wow, Bad Habit, that's a really good habit. If I lose, I will analyze why, and if I can't figure out why, it's because I don't understand the rules, which are out to get me. More motivated and to dig more deeply into the masterclass to find what the rule is. Well done, Bad Habit. They're very good habits. And Marcus had a really good question on chilies. I really like chilies, even though it's very, very volatile at the moment. But we, of course, understand the personalities of the crypto we're actually engaged with. Sorry, Kate. Just kidding. But the concept is, chilies, I believe, is still a really good buy, and it's got a lot of depth at its current levels. That means it's got a lot of buyers and a lot of sellers. It's got a lot of investor attention. So I'm cool with it, Marcus. But of course, I buy according to market structure. And when you get on to the wrong side of the trade, you've got a couple of ways of dealing with it. And Wabi Sabi had a real life event, not a trading event, but something that happened that really set him back and caused great problems. Wabi Sabi said, it hurts, but I'm feeling very calm about it. I have a knot in my stomach, but I didn't even swear, and that's big for me. I have Ken's voice in my head, talking about life pullbacks and setbacks. It is what it is, and now I need to move forward. It's all about rebuilding from a devastating moment. There are lessons for me in this lesson, and there will be brighter moments to come. Wabi Sabi, I hope things improve for you, my friend, and what a fantastic way of dealing with the setback. And Flamingo said, I was thinking about fear, and what popped into my mind today is that when someone is very fearful and full of doom and gloom, they are a repellent. They're so negative, you just don't want to be around them, because their negativity brings you down. Today, I had to turn off a video I was watching because it was promoting fear, doom, and gloom. So, having a negative or fearful mindset is treating yourself in an emotionally abusive way. Powerful words from a powerful Flamingo. This emotional abuse happens in Zone 1 and Zone 2. When you see people promoting fear, there's Zone 1 and Zone 2 influencers. Zone 3 and Zone 4 influencers don't promote fear, they promote a solution. Zone 1 and Zone 2 influencers promote a problem with no solution. Zone 3 and Zone 4 focus on the outcome that you want to create. They couldn't be more different. Flamingo goes on to say, it's an important thing to replace fearful thoughts and feelings with positive ones, so we create a positive life for ourselves and those around us. Really beautiful, Flamingo. And if you have friends or family who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. And I appreciate each and every one inside our beloved global family. It's so beautiful for you to share your comments, to share your thinking with others. It really does help other people, and that's what we're all about as a global family. As Flamingo said, it's really, really important to have positive statements in our mind. And a good thing that we could talk about in the comments, how do you create inner peace and outer peace? This is incredibly important. If you don't have inner and outer peace when you're trading or investing, you'll make the wrong decisions and you'll be guided by fear and not by courage. I really look forward to your comments and your thoughts. And you can also talk about how to master fear as well. I think at a time like this, and times coming up when we could potentially get a lot of volatility, that's really important. And it's also important to consider the other side of the benefits that come with that step backward. It's always 2 steps forward. It's like the 10-5-10 rule, isn't it? A lot of people unknowingly live their lives by statements which are inherently negative. For example, the next time you mess up with something, and we all mess up with things from time to time, that's nothing new, that's the human condition. Just think about what you actually say to yourself inside your mind. Do you say, I got this, I'll fix this next time? Or do you say, oh, I always mess up, this is just like me? You do not want disempowering thoughts to take over your mind. They are very problematic and they will literally take the power away from you. Instead, you want really empowering statements or thoughts to actually guide your behavior day by day. And one of the best is the first line from the CTKS Creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I start small and scale with BORSOG, and I just want to point something out here. GMX is coming up, BNX is coming up, NDX is coming up. Maybe they can't figure out what the spelling is, so they just invest in all 3 of them. Just a clue, I see this all the time. I'll give you another one. Look at Band, it's coming up. Or is it Bond that they wanted to get in? Which one? We'll take both. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. Saying these positive affirmation statements will pave your life to a more beautiful experience as you look at different events, and you'll see them in a more positive light. Because, hey, you've got this, and you've got courage, and you've just booted fear clear out the door. And if you would like to increase your learning, please do the CTKS Masterclass. It's all about transferring 30 plus years in financial markets, and it's very powerful stuff. You can find links in the description of this video. And the CTKS ambassadors can give you a special coupon which gives you 80% off, but please only use the links in the description of this video. Stay safe out there, my friends. Take care and see you next time. Bye for now.